Month end, non-farm payrolls, and how to pick decision levels for your trading plans. That's part of our weekly outlook of markets and profile here for the team with TRADEWITHPROFILE.com. This is for the week of November 27th, 2022. Hi, my name is Josh. I'm founder of Trade with Profile, one of our trading mentors, and here to help you find and develop skill as you're looking to express that in markets. This is part of the initial work that our team does each week. Traders on our development desk who are looking to express ideas specifically in the S&P futures, Russell futures, NASDAQ futures, and crude oil, which are great intraday trading vehicles. And we're starting by getting an overall picture of where the markets are and where we might like to express some ideas. Overall, we're winding down towards the end of the year. We're definitely coming to the end of the month, and we want to talk about what we're looking for in the week ahead. So with that, start kind of in the same place each week. And the first place that we're going to start is just kind of talking some macro environment to get an idea of what is in play and what are we looking for overall. And to do that, we're going to start by looking at the VIX curve. We're looking at the relationship of essentially fear to price. And we've been talking about this for a couple weeks. Very expected post the last CPI and reading is that we are pushing higher on increased complacency. When we measure the VIX, which is the expectation of price movement in the S&P, how much people are paying for puts specifically, we're seeing diminished participation. That has a direct correlation in higher prices. With some of the pending events that we have to end out the year, we're coming into those rather complacent. So now that we're past the holidays, we kind of expected there'd be some drift this week. Now that we're past that, we're looking for some tightening as traders look to hedge in the weeks ahead. The big week that's coming up, we'll talk about it on the calendar, but the big week that's coming up is the 2 weeks time. We have FOMC, CPI, and quarterly OPEX all in the same week. You can see overall, we've got 4,100 to call it 4,050 that are 4,150 to 4,050 that are kind of key areas that we're looking for the auction to test into as we remain complacent. But as this starts to turn, watch for the auction to start pushing back towards those yearly lows. Still think that the yearly lows are likely in for the year, but not the lows of this whole move. We're still seeing lower highs and expecting to see that into 2023. That overall narrative of inflation is not going away. Now, with that being said, let's also just get a look at the calendar for this week, just to see what we've got going on. And we're going to see a number of things that are in place and in play that could potentially juice things up. First, we're coming in off of a holiday weekend. So we're going to look at everything relative to actually last Wednesday's prices. So even though there was a shortened session on Friday, really not paying much attention to that. Everything's going to be on Wednesday. So think of Friday as like extended Globex. So there's a lot of uncertain inventory to sort through. Be very, very cautious on the open this week as we look to test back to prior value before we make some moves. What do we got on the calendar? Monday, really nothing on the calendar. Tuesday, we do have some consumer confidence in the morning. Not expecting that to be super huge, but that could give us a little bit of volatility between A and B period if you're trading equities. Wednesday, we've got GDP before the open. So we're going to watch that price there. We're going to watch all the JOLTS openings that are in the A and B period. That can move. We do have Beige Book. This is like just one other Fed report. We have the FOMC minutes. We have the FOMC meeting minutes. We have this FOMC meeting minutes. And we have Beige Book. This is like the tier 3 one. Not really expecting a whole lot, but GDP, watch the range off the GDP. Wherever that sets up in before the open is likely to kind of tell the story. Then on Thursday, we've got some more pre-open opportunities in terms of core PCE, initial jobless claims. That is all. That's all in play. And then on Friday, we have non-farm payrolls, right? So, where does that play in the macro narrative? The Fed's looking to see that, are the moves that they're making starting to impact what's happening as far as the job markets or not? Is it seeing softening in jobs, seeing increase. It's going to be a little muddy because we got some holiday readings in there, but that will be what people will be looking to parse through. We did not yet talk about the fact that this is the end of the month. On Wednesday is the end of the month, new month on Thursday. So there could be some early kind of markups to end the month as we're near the monthly highs before we come into December. So that is what's in play from a calendar standpoint. Still a low relative volume place, so be careful of that. All that to say is, we're in a place where there's not a lot of strong conviction or participation up until that week where we have CPI, FOMC, and quarterly OPEX. We're at the end of the month. We're past a holiday. Things are kind of slowing down. Look for some correction of inventory in the week ahead. And with that being said, let's start jumping into the specific products. And we're going to start by looking at the S&P futures and see where we are and what we're looking to do. Okay, here we are. We're looking at daily bars, quarterly profiles overlaid to the yearly profiles. We can see some key inventory prices that we're watching. 1, 4150. Okay, 2, 4100. Low volume area composite, that could reject the auction back down. 4150 could pause the auction, would still be a lower high. Watch this area right here around 3965. If that fails, we can start pushing back to where we've had some big CPI buyers the last 2 CPIs. Okay, we are pushing into some composites or some prior binary events, CPIs and FOMCs that knocked us down. So we're kind of between one, below one, above the other. We're in the middle of the muddle. But overall for the year, no, we're below the most traded price for the year. Very much seeing the opportunity that unless we can get above 4150, we're still skewed to the downside going into 2023 with a month to go, right? So we want to be mindful around that. Now, as far as what we're looking for in a posture or overall standpoint, ES is equal to the 5-day, above the 20-day. RVOL is really, really low, 55% on Friday. And now, that Friday range was, we really don't want to count that. We're looking more at we're still expecting about 61 points for the day and about 33 points in the first hour. Most traded price last week, 40.31. We're carrying that forward in the week ahead. Here's looking at the monthly profile. You can see that CPI that's still holding, and we're holding above. Here's that 39.65 area that I said, hey, as long as we hold above that, that should be supportive to go higher. We've got year-to-date VWAP. I think that's a really easy objective to the upside. They're up to 4150. As long as we can stay above 39.65, we're looking this way this week. At least early in the week, we're looking for them to sustain and push up, at least tag that year-to-date VWAP before rotating down. If we pull back early to start the week, watch for them to be supportive, 39.65, for a later week push higher. All right, this is looking at the monthly basis. Let's look at the weekly. How was last week? It was an inside week. An inside week at which we did pull value to the top here. So we are having bullish imbalance. That's also informing why I'm expecting us to go push towards 4,100. Easily to get there when we're inside of 2 standard deviations of monthly VWAP. And we've got supportive inventory below us. Really, unless we get kind of below this area, there's nothing to be concerned about from the buyers. We could also chop around in here, so be mindful of that. If we're below 40.34 and above 39.65, that could chop. Above 40.34, we're looking for the push towards 4,100, 4,150. Get that year-to-date VWAP. I would expect some reaction off of that. Again, any prices that come early higher, likely to fail later. If we pull back immediately, like back to last week's weekly VWAP, looking for buyers to step in, unless we just slice through this, which, that's possible, but know the key inventory that we're looking to support. Should we slice through all of this area, we're going to go back and test the bottom of the ranges that we've been in. Looking at the TPO chart, this is also, again, just reinforcing what I mean about coming off of a holiday week. So this is Wednesday's profile. This is that shortened session on Friday. I don't care about the Friday session. I'm keying off of what happened on Wednesday, and that is going to be right here. So if I open, let's say in range, I find buyers supportive, I'm going this way. If I open above range, would look for responsive activity back in this direction. Notice the composite profile, even though I've got some 5-day pushing up this way, I do have a little bit of dissonance. And so, look for some initial early balance. Now, if we get below Wednesday's low, we've got some impulse in the profile, some naked VPOCs back to a prior balance area that we broke out of. That's all potential to clean up, not necessarily on Monday, but throughout this week, if we can't sustain higher, or if we push higher first and then pull back. In fact, one of the things that I'm going to be looking for initially is going to be what I call third period reversal. We've had now 1, 2, because I'm discounting Friday. So if we open, push higher, and come back, looking for the short back to this area, or let's say we gap higher and fail, that's going to be destination number 1. Destination 2 would be to come down here and clean some of these areas up to the downside, right? So that's what we're looking for in the ES, and want to be mindful of, again, the ranges: 61 points, expected range 33 points in the first hour. Some of the other key references in place. Make sure you download the quick sheet here that's available as a link to this video so that you know where some of these larger composite references are, as well as the expected ranges, weekly highs, and so forth. So that gives us kind of an idea of what we're looking for in the ES. Let's go on now to the NASDAQ and see what we've got going on over there. And also want to look at the longer term chart here in the Qs. Just get a picture of what is going on. Make sure we've updated this to the latest prices. All right, see this 12, basically 165 area. There's a composite node right up here. That is a spot that we've come and tested. Also note the difference of what this large composite looks like for the year in the Qs versus the ES. Actually, the most traded price now is down here. Very, what I'd call a bearish skew, that we'd have to go lower to get to a balanced profile. Now, we could also go this way and build it out. That could basically tell the story of 2023. I mean, it is possible if we're above 11,600, okay, which we came down, tested, and bounced off of that. That's supportive. If we fail there, we're going to rotate lower. But holding above that, we can explore the space higher, can still explore the space higher without making new daily highs. So still lower one time framing lower on a quarterly basis. That still is in play. What are we looking for here on a multi-session basis or a monthly basis? Here we see the monthly basis. What do we got? On a monthly basis, we have bullish skew to the upside. We've held the CPI. Those buyers have been in place after a week of, we looked for range trade last week. We expected that. We got that. We are now have a range to kind of play with. Got year-to-date VWAP up here. This was binary selling back here that's still in place. Notice we've got 12,200. We have a naked monthly VPOC. I think that's a great target to look for. If we can support this composite area in the posture, push for new highs, take out that excess, get up there, expect a pause, a breach of that, and we can start to eat into this selling excess on the way to year-to-date VWAP. Now, don't expect we get there. Monthly expected high, weekly expected high are right here. That's going to be a little out of school maybe this month because we close on Wednesday. However, next month, new ranges, all possible. This is the area we got to support. There's that 11,600. Got to support that, or we rotate back through this and can go to the bottom of this range that we are in. Let's look at that on a weekly basis. A little bit weaker in the Qs than the ES to close the week, but also putting in essentially an inside week. I do want you to carry forward this poor low. Look at that excess. Now, this is that CPI ramp. Every time we've been in this area, we've been finding buyers to gobble this up. So there's a significant Gandalf level down there. There's a prior weekly VPOC down there. That's supportive to the auction. Now, there's other nodes that are in play, namely the 20-day here at 11,760. I'd expect we kind of start there to start the week. We have a range. You see that? We've got excess above, excess below. We're in the middle of the muddle. Watch the edges, right? So this is why I'm saying if we can get above that kind of 950 area, that should be able to take us, toward eating into that excess and up towards that prior weekly naked VPOC. Below 11,600, we're going lower, okay? At least down to this month's monthly VWAP. This week. That's all totally within the expected ranges, totally within play. just like with the ES, let's look at what we're looking for. Now, Friday was an inside day. Again, discount it. We're paying attention to Wednesday. That's the price. We've had 2 days higher, one time framing. If we can get above 11,858, new weekly highs and push higher. So that's going to be kind of the early reference to watch on Monday. Again, could be choppy. Now, note below that, we've got single prints down here, impulsive structure, holes in the profile, back to last week's VPOC. So, keep a very close eye around the 858, 860 area as we start the week. That's going to be the spot that we need to get above and hold that to make a push for, 922 and higher. Okay. Again, end of the month, look for some drift. If we move higher early in the week, we'll look for failure later. If we pull back early in the week and hold like a 600, then, holding the bottom of that balancing range, that can push us towards the upside. Let's look at, expectations. Still expecting about 200 points. Now, this has come down quite a bit. Implied volatility has shrunk from where it was earlier in the year. Not as much opportunity, but still a whole lot of opportunity. Guys, 200 points, it's 4K on a one lot mini. There's still plenty of opportunity that's available here. Still doing 140 points in the first hour. This is exceptional. We've got about 20 days left in the December contract. RVol, still very low relative to where we are. Getting through the holiday, we should see that pick up a little bit. You can see just how bad it was on Friday. Again, not paying attention to that, not reading too much into that because we're coming out of a holiday. We'll see where we are after we get through that. All right, that is the NASDAQ. Let's now talk about the Russell, shall we? The old Russell 2000. And let's go take a look at what that looks like on a longer term basis. Sure that this is updating and giving us the most relevant information. Most traded price of the year, still way up here at 2016. I'm just going to double check that. I don't know if I've updated that here in a little bit. Let's double check. Yep, still up there. Quarterly basis, we are actually inside for the quarter, leaning on a couple CPI bounces. We've held this key node at 1828. See that composite node there? Came down, tested that from the upside. That's hold. That's now key support. We're kind of trapped here in this zone, right? See this node here and this node here. Though that's holding the auction. Above that, we could push into this low volume area and up to this high volume node. Below, if we take this out, then it's back to the lows down here. Keep kind of the macro narrative in play. Let's look at that on a shorter time frame. We'll start here with the monthly basis. One time frame higher for the month, still leaning on those CPI buyers. That's great. Balanced posture. So we're holding that. Year-to-date VWAP is right here. Watch for the punch out and a retest up here towards 1925. And then we've got decision areas, prior inventory that we can look forward to the upside. That's all within a weekly expected high of 1917. Again, if we push higher early, watch for failure later. If we come back into this, kind of chop around and then push, then we could really run, especially if that's post non-farm payrolls. Watch 1810 to the downside on a monthly basis. Weekly basis, last week, inside week, shortened holiday week. Where did sellers come in? They came in at the prior weekly VPOC. That rejected. Here's a bunch of sellers that are still holding the auction lower. So there's some strength here that we got to eat through to get to higher prices. If we fail below the FOMC minutes that came in on Wednesday, so watch last week's weekly VWAP and monthly VWAP, that's the path that takes us down to 1810. So know where those references are. Okay. Where can we kind of push out of this area? Look at the TPO chart. What do we see here? Again, Wednesday's trade, bullish skew to the upside. They got additional trade higher on Friday. Where do we got to the upside? We do have some selling excess that's still in play, but we've got naked VPOC by that year-to-date VWAP. That's the spot that we're looking to get to if we're holding above this area of volume prior weekly VPOC. Below that, this can all be chunky and chundry. So beware. Watch the references for that. Okay, so that's kind of what we're looking for in the Russell. A little less directional conviction, kind of a pinch here in what we're seeing across these references. But, if they can stay above, your 1856 to 1860 should be supportive to higher prices and a retest of that year-to-date VWAP. Below, and we're looking for 1841, ultimately failing down to 1811, retest of kind of where those CPI buyers came in. Okay. Finally, let's talk crude oil. And crude oil has, essentially was the one product of the four. Last week we really expected just range-bound trade. That's largely what we got. Crude oil, we were expecting more directional trade, and looking at, and why was that? Why were we looking for that directional trade? Because the prior week we had a balancing auction, and then we had a week where we closed with strong directional conviction. So we were looking for the profile to backfill, to accept those prices. That's exactly what has happened. Offered really, really great opportunities, especially off of this flush and back up here, as we were trying to essentially advertise higher to pull participants lower. We can see this more clearly on the weekly chart. Okay, so note where that prior weekly point of control was, and inventory was diminishing. So that meant lower prices that came early in the week were likely to get pulled back. It's exactly what happened. Note now how the profile has filled in the 5-day, which was up here, has now migrated, and now we have a new posture. That also means that 77.77 is kind of the key area that we're looking for defense, but unless we can get above 82, we're looking for continuation to the downside, above 82, and we kind of get between profile references, and that can lead to chop. If you look to a revisit of the monthly VWAP. To the downside, we had really, really strong buyers that came in off of an OPEC report. If they get challenged, we can keep pushing to the downside. And we are at a place, let's just go look at the long-term composite here, where, it's not, not looking so great for crude. Note where we are on the year. Really want to defend this buying excess. A retest here really does open the door for us to push basically back towards the top of 2021. So we could see $70, along with the seasonality of where we are in terms of like demand. It's diminishing. So at this time, could be making a push back towards $66. Unless we get above 87, we really need to kind of get above that and hold. We've not been able to do that. So 87, 88, 89, not been able to do that. We're now in the January contract, and we're struggling. Okay, so unless we see some buyers step back in and stop the progression, I think we're going to challenge this and push lower. Okay, so that is crude oil. Let's just talk some other ideas that are in focus, and there really isn't much. At this time of the year, we're really not looking to press a lot of ideas. I'm still looking at Bitcoin here. I'm looking at the crypto space, just what's happening, as far as the whole FTX debacle. The plan still remains the same here for Bitcoin, and that is that I need to see this thing get back inside of this range. Then I can be long and defend wherever that bottom is, and really kind of hold inside that range to be the other side, and then push towards our 35K. We're not there yet. Not seeing anything supportive. We're actually seeing him hold and balance at lower prices. So, there may, and I don't anticipate doing anything with this year. I'm probably going to be more of a 2023 play. We really do still have about 3 weeks left, guys, before we look to do something. So we're really going to be keeping it to the sidelines. And that, in fact, takes us to our development focus. And one development focus that I want to talk about is decision levels. Now, what is a decision level? Traders like to use zones, levels. Some people are kind of trading level to level. I prefer decision levels as essentially it's an area in the auction discerned through the profile that I have an expectation of how the auction will behave. Because I'm a behaviorist. At the end of the day, I borrow from technical stuff. I look at fundamental, but really the only fundamental that matters to me, I think the only fundamental that should matter to you is human behavior. How do humans use fundamental information, macro stuff? How do they use technical indicators? Which ones are there? What's so great about the profile is that tells us where all of those participants from all of those perspectives are putting their money on the line, right? When I look at this Bitcoin chart, I can see where people have been doing business. I can see where they have not been doing business. And I can fold in all the macro stuff and the technical stuff and just look at what's happening from an inventory basis. But how do you go about kind of picking decision zones? And this is a key competency to have if you're looking to build a plan and have some expectation. So, what I want to do is I've just got, let's just clear this chart off. We're going to hide all the prior reference areas. And we're just looking at this TPO chart in the NASDAQ. And we're going to identify some decision zones. Essentially, in this case, we're going to look at ones that we're expecting the auction to slow at. So I like areas that I'm expecting it to slow the auction. And here's the sauce on that. The more inventory is there, the more likely that's to slow the auction when I revert to it. It's also more likely to be a magnet the closer I get to it. So there's, a daily VPOC. So like here's a daily VPOC right in here. That's a magnet, but that's just one day, right? When I add a couple different days to that, I get a much bigger magnet. So let's just mark that up. So coming into Monday, I've got the most traded price from Wednesday. That's the level. Okay. What are other references that I have like that? Well, I've got some high volume intensity up here. I've got a naked VPOC up there at 12,024. What do I have in here? I've got a naked VPOC here, 11,700. Those are all just kind of clear references from prior ranges and could all be achievable. The closer I get to those, the more they're going to pull, right? So as part of just initially on my plan, if I'm above this and pushing, I'm looking for 12,024. If I'm below this and pushing, I'm looking for that naked VPOC there. Those are the most traded prices on those days. What other references could I have? Well, I can go back and look at, the last 5 days. So let's just look at the last 5 days that'll overlap from the prior week. And I can merge that and I find a node right here, 11,754. Split that into days. All right, we're actually going to update our composite back to that date. So you can kind of see this. Here's that volume profile. Okay. So now I've got, 1, 2, 3, this one right here. 17th. Okay. I've got a node there. I also have a node down here. That's a high volume node. I have a node up here. So I'm identifying and eliminating a lot of prices to the auction. Oh, I've got a node right here, right? At 800. And the auction moves from value reference to value references. In a sense, all these high volume nodes are value references. Now, I also have a low volume node. Now, it behaves a little bit differently than a high volume node. High volume slows the auction. Low volume, we can bounce through. So if I'm, up here, I could expect it to pause before it breaks and goes and pauses. Down here, pause and break. But this one, it could go through and then snap right back out. Or it's going to slice straight through it and go down to the next area here. So they behave differently. I like the high volume nodes typically, unless it's a very, very stark low volume area. I just do the high volume because I'm looking for that to pause. Now, how am I using that? A couple different ways. Get over here. One, I'm recognizing that not all prices are worth my attention. Two, it's a zone that I've pre-decided that I will make a decision. Now, that decision could be to enter, to exit, or to do nothing. Right? Doing nothing is a decision, and they can be static or dynamic. Now, when you've seen me look at like weekly VWAP and monthly VWAP and stuff like that, those are dynamic references that update as the session goes along. And ETH VWAP, stuff like that, those are dynamic. Even the developing volume point control for the current session, that's dynamic. But like prior day VPOC, that's a static reference. Okay, so in your plan, as you're looking at these inventory levels, they're both static references and dynamic references that it's wise to consider because they all have an expectation of behavior around that. And this is something we cover in Module 12, where we talk about using prior auction to define decision levels for the pending auction. So when you're coming in and you're trading, your first reference of action is prior inventory, knowing where those are, knowing where there's likely to be a behavior, and looking at references and zones that incorporate the most number of participants are going to be most effective. So, the most traded price of the prior day, guess what? That's effective for somebody looking at a 1-minute chart, a 30-minute chart, a daily bar, hourly bar. They're all going to know where that most traded price is, right? Because it's just looking at price this way, not within a specific period. Very powerful reference, something to lean on. Okay, so that's how we develop those. I typically look for levels above or below, 3 above or 3 below the prior close, and have those in place before the auction starts. That all helps me be a 4-question trader. You can find more about that at TRADEWITHPROFILE.com/4questions. Some other ways to build skill this week: interact with us on Twitter, follow the posts that we put out, schedule an insight session. Give us a chance to look at your approach and give you some actionable feedback, some concrete actionable feedback to get where you want to be. Through this weekend, we are encouraging traders to join us in our development pathway through the end of the year as part of a jumpstart for 2023. We talked about it's not a great environment to be active in 2022 anymore, but it's a fantastic opportunity to be active in preparation for 2023. We have some investment that we're making in you through that. So you can check that out via a coupon code that is valid through Sunday and Monday. There's details that will go out on the email and be posted in the link. For the software that we use EdgeClear's Edge Pro X and Window Trader. So feel free to check those out. If you like what you're seeing in this software, we're not compensated in any way to use that. It's just great tools that help us see the auction clearly. And then finally, for those of you who are already in the pathway, hey guys, we'll see you back for a full week. And we've got a couple weeks left to do some good opportunity. And we'll be talking intraday as well as on our development sessions, looking to keep building skill toward 2023. All right. That's it for this week. Let's check back in next week, shall we? Post-holiday week, we got non-farm payrolls, got some GDP in there. Month end, have a little bit more going on as we're expecting the VIX to start tightening up going into some of those larger releases before we end the year and put a close on the end of 2023. Thanks for watching. Love hearing how this is helping you get insight, even if you're not part of our development pathway. But always want to encourage you that if you're looking to take that next step, you can reduce your opportunity costs down the road a lot by getting a good foundation around that. And we think that our development pathway is a great place to do that. So cheers. We'll talk to you soon. Have a great week.